What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we're starting to see the bull breakout from the bear market resistance, and we could be in the very early stages of the next bull trend. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we're going to start out looking at the weekly chart of SPY, and you can see just one day into the week we're already breaking yesterday's high, which is confirming the bullish hammer. Because anytime you get a bullish hammer, you want to see price action breaking above that high, and we did confirm that with today's price action. You can also see from the weekly chart, and we will go over the daily chart next, that we are also getting the bull breakout above the bear market resistance, and we're very close to breaking over the weekly 50 EMA. So this is clearly confirming the weekly bullish pivot that we had from SPY 380. So continue to stay objective, because you can't stay wrong in this market for long, or you're going to lose a lot of money if you're holding short during a bull breakout. And right now we are clearly getting confirmation of a bull breakout with the next critical weekly resistance up here at SPY 407. Alright, jumping over to the daily chart of SPY, you can see we're up 1.2% today, and we did bounce off of that negatively sloping 200 daily moving average. So we are definitely getting the bull breakout above the 200 daily moving average and above the bear market resistance trend line, which was right around SPY 399 to 400. Now I told you if SPY broke above 400, I'm going to move the bear to 414, but I will give the bears benefit of the doubt, and I will give you one more day to prove this was not just a short squeeze through resistance, which would mean this is just a false breakout of the bear market resistance. But starting tomorrow, if we continue to close above the bear market resistance trend line, this bear will either go away or will be moved up to SPY 414, because that is very likely where the bulls are trying to get to. So for the time being, without a doubt, this is a very bullish breakout, which means if you're holding short and you're still holding short positions during this breakout, you need to make sure you have some sort of exit strategy in the event that you're wrong and the market continues to go higher. If you're holding bullish, then you're just holding on because you have great risk reward from here, and I would suggest having your risk set down here right around SPY 395 or 390, because those are very strong support levels that are very likely going to allow you to hold your long trade without getting stopped out. If SPY starts breaking the critical support at 390 and breaking down below the support trend line, this is clearly a false breakout and we instantly need to get more bearish. But right now all signs are pointing more bullish than bearish, and we're seeing some very nice high volume buying as we break through resistance. And there is still a very good chance this short squeeze continues as bears doubt this rally and continue to short green days. So don't be surprised if SPY goes into a face ripping rally to higher prices, but that will be contingent upon staying above the breakout level, which right now is going to be right around SPY 398. And if we break that, we need to hold above this 200 daily moving average. On the NASDAQ 100 triple Qs, we were up 2.22% today, and the triple Qs had an absolute face ripper today, closing outside the upper Bollinger Band. And I do think this bear is very likely going to retreat back towards the gap fill at 308. But again, I will give you one more day to prove this was not just a false breakout short squeeze. So one more day above 288 and the bear will be retreating to higher prices. So right now in the triple Qs, you can see we also had the bull breakout above the bear market resistance trend line, which was that breakout above 285, and we sliced right through the resistance at 288. So from here, we're looking for the next upside resistance at this negatively sloping 200 daily moving average and previous daily high right there at Qs levels of 294. And then above that, we should have a very smooth ride up to fill the gap at 308. So looking at this chart, you can very clearly see in the short term, we do have higher highs and higher lows, and we do have positively sloping moving averages, except for the negatively sloping 200 daily moving average. So with the price action breaking out above the bear market resistance trend line, there will be a lot of shorts exiting their short positions, because they have been holding those positions for the majority of last year, and now they can clearly see we're getting the breakout, so they're going to start locking in those short position profits that they had from last year, and they may even consider looking into bullish setups, which means we're more than likely heading into a bull trend. So we'll give one more day to prove this was not a false breakout, which means tomorrow we need to close above 285, and if we get the second day in a row above 285, we are going to start calling this a bull breakout, which means we're likely heading to higher prices. So as bulls, set your risk at 285 and 280, or you can use this lower support level right around 275. But no matter how you spin it, this is looking bullish and we just need one more day of confirmation. On the Dow Jones, we're up 0.75% and the price action is back over all of the moving averages as we are developing a bull trend. So we just need the Dow Jones to continue to push higher towards 343 and 346 to confirm the bull trend. Critical support in the Dow will be down here right around 334 to 332. And then if we break that support, we could come back down to 327. On the Russell 2000 IWM ETF, we were up 1.24% today with the price action back over all of the moving averages. So we do have bullish price action, and we're clearly developing a bull trend with all of these moving averages starting to show positive slopes, and the 200 daily moving average is starting to flatten out. So critical support will be down here right at 182 and the gap fill just below 181, with the critical resistance on the break above 188, which should send us to 195 and then 197. On the ARKK ETF, we were up 4.33% today, and the ARK ETF is back over all of the moving averages except for the negatively sloping 200 daily moving average, and we do have the critical resistance up here at 38. Above 38, we'll be looking for the run up to about 40 to 41. And if we get rejected from resistance at 38, we'll be looking for a retest of the support level down here right around 35. As long as we hold above 35, this is looking bullish with the confirmation on the break above resistance at 38. On the VIX, we were down 0.3% today as the VIX is continuing to get crushed and continuing to close down below 20, which does tell us that fear is leaving the market as we get the bull breakout. Remember, we need the VIX above 20 to confirm the volatility is high enough for a bear market, and right now the VIX continues to crush lower in this downtrend. The VIX below 20 means it's likely heading to 18, and the VIX above 20 tells us to be a lot more cautious. On Bitcoin, we're currently up 1.12% as Bitcoin is trading right around 23,000, and as you can tell from the moving averages, Bitcoin is going into a bull trend very quickly, and typically speaking, Bitcoin is very bullish when it starts breaking above its 200 daily moving average. So there is a very good chance Bitcoin is going into a bull market from here. Bitcoin is bullish as long as it's above the breakout level right around 20,000 to 21,000, with the next upside price target just below 25,000. On Amazon stock, we were up 0.28% today, with Amazon continuing to consolidate above all of the moving averages, and it's very likely building up energy, getting ready to run back up towards this gap fill at 110. For that reason, you should be staying bullish in Amazon as long as it's above 93.5, and then below that, you can get more bearish for the gap fill below at $90, with the next bull breakout being the break above resistance at 98 and then 102. On Microsoft stock, we were up 0.98% today, and Microsoft is back over that extremely critical bear market resistance, which was that resistance at 242. And from here, we could see Microsoft running back up towards 252 and this gap fill at 265. You could stay long on Microsoft as long as we're above 239 to 235, but if we break all of that support, we could be coming down here to fill this gap at 225, and Microsoft does have earnings tomorrow after the bell. On Nvidia stock, we were up 7.59% today as Nvidia is getting that very impulsive bullish bounce off of the support at 166, and we quickly reached our price target at 192 with that breakout above resistance at 179. From here, we're getting a little overextended, but we are seeing high volume buying, so maybe it can last. So we will want confirmation that we're going higher with that break above 192, and then we could start running to 213. We're outside the upper Bollinger Band, so don't be surprised if we need a little bit of a cool down, which means we could be coming back down towards 185 to 179. On Tesla stock, we were up 7.74% today as Tesla gapped up and blasted through that resistance at 138, and we did close outside the upper Bollinger Band. And again, this is all happening on very high volume, so I continue to tell you there's a very good chance Tesla stock bottomed at that weekly support at 107. Remember, we had high volume buying ever since we hit that weekly support level, and ever since we're back in short squeeze territory while we're trading above 123, which means we could start running back up to 155 to 167. So right now you're staying bullish as long as we're above 138, and if we break below 138, you're getting a lot more bullish at the gap fill right around 133. On Apple stock, we were up 2.35% today as Apple is also getting the bullish breakout above the bear market resistance trend line, which was this resistance right around 136 to 138, and today we did also clear another resistance above 141. We're outside the upper Bollinger Band, so we could see a little bit of cooling down before we go any higher, with the next upside resistance at 146 and then 150. Downside support is now 138 and 135, so you can stay bullish as long as we're above support. On the financials, we are up 1.16%, and the financials have the bullish price action with the bull trend, so this is clearly a very healthy financial sector. The industrials were up 1.09% today, closing that gap right around 100, and price action is back over all of the moving averages as we're starting to look a lot more bullish. The healthcare sector was up 0.34% today, breaking back over the resistance at 134, but still finding resistance at this negatively sloping 20 daily moving average at 135. So if we do get rejected, we're likely coming back down to 131. The energy sector was up 0.13% today with the bull trend and the bullish price action, so very likely trending higher towards 92 and then 94. So jumping back over to the S&P 500, the bulls are doing everything they need to do to get the bull breakout above the bear market resistance trend line, which means you instantly need to get a lot more bullish because we follow the price action in the trend, and right now the bulls are showing they have the strength and they are the ones pushing through resistance, which means the bears are very likely going to retreat to higher resistance levels and wait to attack until we get to a higher price. So as I always tell you, we stay objective and follow the price action, so there's no way we're going to be bearish while SPY is breaking out of the bear market resistance trend line, and we're seeing bullish patterns across all of the sectors, and some of the big tech companies are starting to look like they're catching a bid. Big tech is likely going to move the market after big tech earnings, which means we could easily go into a bull trend from here. So follow the chart and let the price action do all the talking. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank Trade Alerts or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, come join us over at the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis and the members-only videos. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.